In today's video, we are going to learn about the accounting equation. So, what is accounting equation? So, before creating or preparing any financial statements of the organization or company, we need to have a basic understanding about accounting equation. So, accounting equation states that at all times and without exceptions, the following will be true. Matlab, when you are preparing financial statements, accounting equation is the basic step which states that at any condition your financial statement should comply with this accounting equation. So what is that equation? That is assets is equal to liabilities plus owner's equity. So your assets should be equal to or should tally to the liabilities which the company owes and the owner's equity. Okay, so what does that mean? We'll see one by one. So now first coming to assets, all of the property owned by the company. So all of the properties like buildings, furnitures, property, plant and equipment, machineries, cash which the company owes. Okay, by owning which the company has long term benefits, or which by holding that asset, if the company is generating income in a long term, that is called as assets. So every property which company owns is known as assets. And what is liabilities? Liabilities is what which company owes to other person. Means the liability is the thing which company has to pay in future, or company has to return in future. It is not owned by the company. Okay, for example, mm, in exam, if you borrow one pen from your friend, okay, next day you have to return that pen. That pen is not yours. So in this case, the pen that your friend has given to you is liability for you and asset for your friend, because the pen is owned by her. Okay, so the pen owned by her is asset for her, and she gave that pen to me, so I have to return that pen in any case. Okay, so I have to return it in future. It's a liability for me. I have borrowed from her, so it's a liability. So all of the debts that the company currently has outstanding to lenders, okay, is a liability. And next coming to owner's equity. So owner's equity, or you can say shareholders equity, the company's ownership interest in its assets after all debts have been repaid. Okay, the company which ownership interest means the company has a share capital or preference share capital. If in the times of liquidity, first what we that is another concept which we will discuss in later about the liquidity and all, but for now I'm telling you, if the company is shutting down and if the company is like preparing its final accounts, then whatever the company generates income or money, first it will be repaid to the outsiders. Means liability will be repaid. All the debts or all the money, all the loans which you have borrowed from outsiders, that outsider money will be returned to the outsiders, creditors or banks. For example, if you have taken the loan, so all that money will be first repaid, and the remaining portion will be distributed among the shareholders. Shareholders are the owners of the company, so all the money in the form of dividend will be shared to the shareholders. Okay, so for example, Lisa owns 3 lakh dollar home. To pay for the home, she took out a mortgage loan on which she still owes 2,30,000 dollars. Lisa would be said to have $70,000 equity in the home. Applying the accounting equation to Lisa's situation would give us the below. Okay, here Lisa owns 3 lakh dollar home. So she owns means she has a control over the property. So it is an asset for Lisa. So this 3 lakh dollar would come under assets. And to pay for the home, she took a mortgage loan. Loan means we have to repay in future. It is a liability for Lisa. She owes to others. So in this case, she has taken mortgage loan. So in any case, she has to return that loan. So she owes 2,30,000. It's a liability. So it comes under liabilities. Plus owner's equity. She has a equity in the home, matlab she has share in the home. Okay, so it's owner's equity or shareholders fund or shareholders equity. So it $70,000 comes under owner's equity. Now if you can see, 2,30,000 plus 70,000 is equal to 3 lakh. Okay, in other words, owner's equity, the part that often confuses people, is just a plug figure. It's simply the leftover amount after paying off the liabilities or debt. So, while the accounting equation is conventionally written as assets is equal to liabilities plus owner's equity, it might be easier to think of it this way: assets minus liabilities is equal to equity. Okay, for example, if asset cash is owned by us, okay, it is an asset. If we have earned 1 lakh cash, and if we have taken 30,000 uh, from bank as a loan, for example, so 1 lakh minus 30,000, which is 70,000, it is owner's equity. After paying all the debts, the remaining amount will be called as owner's equity. So if 1 year later Lisa had paid off 15,000 of her mortgage, her accounting equation would now appear as follows: 3 lakh was asset and she has repaid 15,000. Earlier it was 2 lakh 30,000, now she has repaid 15,000. So 2 lakh 15,000 she has repaid, and that 15,000 will get added in owner's equity because remaining amount goes to shareholders fund or owner's equity. Because her liabilities have now gone down by 15,000 and her assets have not changed, her owner's equity has by default increased to $15,000. Okay, so here it is: my asset is your liability. Okay, so one concept that can trip up accounting is the idea that a liability for one person is in fact an asset for somebody else. For example, if you take out a loan with your bank, the loan is clearly a liability for you from the perspective of your bank. However, the loan is an asset because in future bank is going to generate income from that loan because you are going to pay the amount to the bank. So if you are going to pay, that is liability for you, but bank is going to earn. In that case, that is asset for bank. Similarly, the balance in your savings or checking account is of course an asset to you because it is owned by you. For the bank, however, the balance is a liability because in future if you withdraw that money, the bank has to repay that amount to you with the interest. So that is a liability for bank. Okay, so this is it for today. I hope you learned about accounting equation, and I hope I was able to convey uh, this to you. So if you have any questions or if you have any doubt regarding accounting equations, you can post those questions in comment section below. I will try to answer all your questions, and please support me. Please keep sharing, liking my videos, and subscribe to my channel. And yeah, stay tuned for my next video. Till then, bye bye. Thank you.